If this is your first crypto winter, then welcome. We've been through many since 2011, and they've always hit like an ice bath. We are in the panic blood in the streets phase. It clears in weeks to months as a bottom is found, then a long climb up the ladder, Hoskinson had said. Was Hoskinson's prediction supported? Be sure to stay tuned to this video to find out. Bear markets can be tricky for inexperienced or new traders. It is usually characterized by a sharp downward movement in price, where more investors believe prices will continue to fall, thereby causing a downward spiral as they sell to prevent further losses. This concept always initiates a situation where supply is greater than demand. The global crypto market capitalization was down by almost 60% from its all-time high of 3 trillion, as it stood at currently 1.25 trillion. The top cryptocurrency by market cap, Bitcoin, was down by 56% from its all-time high made in November 2021. Ethereum, the top altcoin, was not left out of this crash. It's down from its all-time high price of $4,847. Thus, it seems like crypto holders are in fact in a full-blown bear market. Additionally, the range-bound movement of the larger crypto market cap and most top coins prices has confirmed the bear market's doubts. If history is any guide, a bear market would mean more pain in store for investors. The S&P 500 has fallen by an average of 32.7% in 13 bear markets since 1946, including a nearly 57% drop during the 2007 through 2009 bear market during the financial crisis. It took a little over a year on average for the index to reach its bottom during bear markets, and then roughly another 2 years to return to its prior high, according to the CRFA. Of the 13 bear markets since 1946, the return to break-even levels of the 13 bear markets had varied, taking as little as 3 months to as long as 69 months. Currently, the stock market's brutal year needed a grim milestone as the S&P 500's decline on Friday threatened to leave it in a bear market for the first time since March of 2020, fueled by the worries over sky-high inflation, a hawkish Federal Reserve, and future economic growth. Another indication of a bear market is seen in NFT investors. Non-fungible token investors have entered the bear market as a result of the recent chaos, which is ultimately impacting the morale of the cryptocurrency community. Data from NFT Price Floor reveals that the average 30-day price floors of NFTs have declined by approximately 50% from a little over 40 towards the end of April to currently standing at 20.18. Transaction volumes have also declined significantly in the space. The recent declines in NFT prices are a result of factors including the United States Federal Reserve's raised interest rate, Terra Luna and UST-based platforms collapsing, and traders coming to terms with the reality that the entire sector is indeed in a bear market. So it is now evident that the bear market is in full inception. This is to clear out the opinions of the situation being a bull market correction. Bear markets have happened in many stocks. It would be best to say that it is a bear market, which we'll get over in a few months because bear markets normally do not fall 50%. But the 2008 bear market was an exception as they fell 50 to 60%. The US bear market of 2007 to 2009 was a 17-month bear market during the financial crisis of 2007 and 2009. The S&P 500 lost approximately 50% of its value, but the duration of this bear market was just below average, allegedly due to extraordinary interventions by governments and central banks to prop up the stock market. So will the current bear market prompt a repetition of history? Many consider a recent turn of events as a black swan and historic in size. While weighing on the unwinding of UST, Hoskinson stated that a collapse of a stablecoin or a project exit scam does not mean it's the end of the entire industry. He added that the whole point of the crypto market is to restore the lost trust, credibility, and stability in the global money system. The market prices of various digital assets serve as evidence that the market has officially welcomed a crypto winter. As expected, investors in the space wonder how long it will last. Going by the previous markets, it could be that the market is in for the long haul. But Charles Hoskinson has provided his thoughts on how long he believes the bear will stay. With the prices of major cryptocurrencies such as Bitcoin and Cardano, speculations abound when the bottom of the market will be reached. The negative sentiment that has washed across investors in the space has not done much to help things as the prices continue to decline. Nevertheless, this hasn't prevented them from trying to pinpoint when the market will reach its inevitable bottom. Charles Hoskinson opened that ADA has been underperforming lately because crypto is in a bear market. In his view, nothing can move the USD valuation up during the current situation. Addressing the market in a tweet, Hoskinson presented what he believes will happen to the market. The tweet started by welcoming those who are experiencing this as their first crypto winter, and went further to put a time frame on it. He believes that the downward trend will continue for weeks to months. If this is your first crypto winter, then welcome. Been through many since 2011, and they always hit like an ice bath. We are in the panic blood in the streets phase. It clears in weeks to months as a bottom is found. Then a long climb up the ladder, Hoskinson had said. Hoskinson's words came amid his project's latest updates, which had had little to no positive impact on ADA's price. Cardano had outlined several updates for its network, including the launch of a cross-chain bridge. Later on, it revamped its block size by 10% to improve scalability. At the same time, reports claimed that whales were on a buying spree at the start of the month, but that didn't push ADA north either. The asset charted an all-time high last autumn above $3, before the market-wide crash drove it south hard. As of now, it struggles at 56 cents, meaning it has dumped about 80% since the peak. Also, Hoskinson had posted a tweet with a gif of a man openly expressing his pride. That feeling you get when you have gotten all the fundamentals right and your protocol keeps getting faster, more decentralized, community growth, and continues to be the most advanced technology. About ADA's bear market, Hoskinson said, "That's what happens. Nothing changes it and no announcement will make a difference." Of all the digital assets suffering through the crypto winter, ADA has been one of the hardest hit coins. The digital asset, which had made its all-time high of $3.10 last year off the back of the launch of the smart contract capability, has shed most of that value. Once bears had pulled the cryptocurrency down to 50 cents, it seems all hope was lost for it to recover back to the coveted $1 level. This means that it's now trading significantly below its 50-day moving average, an important pointer for the short-term movement. In the longer term, ADA continues to perform poorly. Sentiment has now skewed the favor of selling ultimately, making this a seller's market. ADA investors have not been spared the bloodbath either, as it is now one of the worst performing in terms of profit, with more than 70% of investors holding bags of losses. Charles Hoskinson went on to jokingly bemoan the fact that Cardano could perform a variety of miracles and would still fall apart of the broader cryptocurrency bear market. Moreover, various enthusiasts have been staking their opinions about the crypto bear market. Generally, they believe that the current crypto bear market will only end once the Fed eases its hawkish monetary policy by halting interest rate hikes. It could happen in the next couple of weeks or months. This supports Charles Hoskinson's previous prediction. While the crypto market can be volatile at any time of the year, it can be exceptionally difficult to make accurate decisions during these specific phases. But it is an undeniable fact that the fall in prices in the bear market is usually followed by a sense of pessimism among investors. However, it can be the right time to make some good crypto purchases that will prove beneficial in the long run. The issue with this step is that you don't know how long this period will take or how far the prices will drop. So you're at the risk of making a premature buy or missing the chance of making a good investment altogether. But let us know your thoughts about this in the comments section below. Be sure to click on the subscribe and bell buttons.